Okay. Excellent. So we already have attendees already. I can see them trickling in. Wow, loads. Okay. If it's okay with David and Robbie, I'll make a very small introduction about WBA, and then I'll let you guys take it away from there. Is that all right?
That's great. Thanks, Robert.
Okay, no worries. Brilliant. Hello, everyone. Welcome. This is Robert Zlockauer, first name spelled like Robert, from the World Biogas Association. I'm dialing in from London, and of course we have Robbie and David dialing in from South Africa. I'll just give you, today of course we'll be discussing an introduction to the SA carbon tax. Robbie and David will tell you more about it. As for me, I just wanted to give you just a very quick introduction about WBA and our upcoming flagship event. What we'll do is I'm going to make this comment, then I'll pass the webinar over to Robbie and David. And if you guys look on the bottom of your screen, see a button that says Q&A. You're welcome to at any time to put in questions in the Q&A. There's also a chat function as well. And what we'll do is David will keep an eye on those, and I can help flag if any of them are popping up and we've missed any. And then at the end of the presentation, we can begin the discussion and answer any of those queries. In terms of WBA, a global association, and we represent biogas so it can achieve its full potential everywhere. And this involves covering all aspects, from waste to treatment to anaerobic digestion, into some of the co-products like the biofertilizers. We are hosting plenty of activities such as these webinars, market reports, and we speak at events internationally. And coming up next, I'll show you on my screen here. We've got a, sorry, I misplaced the button here. But anyway, we've got a, here we are, an event coming up in July. It's the World Biogas Summit. And that's on the 3rd and 4th in Birmingham, UK, and you're all invited. Some of you are Sabia members on this call, some of you are WBA members, and you are welcome to attend. It's co-located with the UK AD and World Biogas Expo, and also the AD and Biogas Industry Awards. So the summit is going to bring an international lineup of thought leaders to discuss the huge potential of biogas, and we're going to feature case studies from around the world. There's a whole litany of really fascinating subjects, but just to flag a few of them, we're going to speak about circular cities. For example, the case study of the Magic Factory in Norway, which you may have come across. Another example of the topic is driving up the potential of renewable natural gas, or what we call sometimes biomethane, as a transport fuel, and also the role of biogas in meeting the world's future energy needs. So those are some of the real high-level topics of the summit. But happening at the same time at the Expo Center, the NEC in Birmingham, in addition to the summit, we're also having our expo. And the expo will drill down deeper into what you can call the nuts and bolts of the subject. So we'll look more specifically at food waste and water, future farming, innovation, and a few other content streams. There'll also be, of course, plenty of exhibitors and loads of networking. The awards on the 3rd of July at night are lots of fun. We've got entertainment, great place to bring clients and to meet other delegates. That's really an opportunity to celebrate excellence within the industry. So you can see there on your screen all the websites. They're all interconnected as well, so check them out. And if you have any questions, you're welcome to give me a shout at any time. So with that in mind, I will now stop my video share, and I will put myself on mute, and I'll let you, David, and you, Robbie, the rest of the webinar.
Thank you very much, Robert. For those of you who don't know me, my name is David Sobey, and I'm currently on the SABIA Steering Committee. So welcome to everyone who's attending, and we trust that you'll find this presentation of benefit to you. I'd also like to just thank Robert and the World Biogas Association for allowing us to make use of their teleconference facilities. One of the goals of the SABIA Steering Committee is to find ways to add value and increase benefits to the paid members. And as part of this, we're experimenting with these webinar sessions, which would be exclusive to SABIA members. There are a few other topics we have lined up for the year, and based on the success of these webinars, we'd like to roll them out on a more regular basis. Today, we're all tuned in to hear from Robbie Lowe. Robbie is the founder of Promethium Carbon, which was established in the 1990s, and they've become leading experts in carbon and climate change. So as Robert has said, you guys can type in questions on the chat as we go. I think let's hold all the Q&As until the end though. And I think I haven't used it before, but I think you just do it through the chat, and then we will see those questions come up in the Q&A. But without further ado, I think, Robbie, let's hand over to you and hear from you.
Yeah, thank you, David. I've switched on my video for a minute so everybody can just see what I look like, that I'm real and I'm here, and you're not just looking at a recording. I do have a presentation here, so I'm just going to do a share screen. And then with a little bit of luck, you'll be able to, you should be able to see me now. And you should be able to see the presentation now. I just want to see if I can switch off the video camera now because my battery is, I'm actually at a conference now. I'm sitting in an empty hall to do the presentation. Can I just get some feedback? Can anybody see my screen now and hear me talk?
Robbie, I can, so I think everyone else is able to. I don't think the delegates are able to talk and return.
Okay. Cool. So I'll just assume that everybody can. If you look at the title of the presentation.
Yes, we've got a few of our delegates typing in the chat. They can see the screen up there.
Thank you. Thanks for the feedback. So talking about carbon tax, which isn't really relevant to the biogas industry with respect to the paying of carbon tax, but it is very relevant to the biogas industry with respect to the offsets that associate the tax. So I'll just go through the presentation. I'll go through at a fair pace so that we've got more time to talk afterwards. So if there's any questions coming up, I think just make some notes and then we can always step back into the presentation and look at specific slides and address certain issues in slightly more detail. The background to the tax is that South Africa has legislated to implement a carbon tax from the 1st of June, which is the 1st of next month. So companies that has got direct emissions of greenhouse gases will be liable to pay tax on those emissions from the 1st of June onwards. The tax is payable on direct emissions. For those of you who are aware of how one does a carbon footprint calculation, you typically calculate both your direct and your indirect emissions, where your indirect emissions, for instance, is emissions that is associated with electricity that you buy and other things like that. In this case, the tax is only applicable to direct emissions. If we look at the second bullet on the slide, what is important is that the waste and agriculture sectors are excluded from paying carbon tax. And we'll get back to the relevance of that a bit later. The tax rate is set at 120 Rand per ton of CO2. It will escalate over time. Between now and 2022, it will escalate at CPI plus 2%. And after 2022, it will escalate at CPI, which is the inflation rate. And then I think the important thing here is that there are a number of relief mechanisms to reduce the effective tax rate. The first is a basic allowance of 60%. So for the first 60% of your emissions, you will pay zero tax. Then there are a number of other allowances that relate to fugitive emissions, trade exposure, energy efficiency improvements, and then lastly, the one that is relevant to the biogas industry is the use of offsets. If we just look at the Carbon Tax Act quickly, Section 13(1) says a taxpayer must reduce the amount in respect of the carbon tax for which the taxpayer is liable by utilizing carbon offsets as prescribed by the minister. When the final Tax Act was published, we were very surprised to see the word must in this. It basically says that anybody who pays carbon tax must buy offsets. In the initial versions, it was may. We're not sure that the intent was to make it must, so maybe it's just bad drafting, but it's interesting that it's there. And in Section 19 of the Act says the minister must make regulations. And we will see just now that the regulations are what we're still waiting for. Very briefly, a definition of the carbon offsets. A carbon offset is a reduction in emission of greenhouse gases made in order to compensate for or to offset an emission made somewhere else. The motivation for using carbon offsets are, first of all, it allows tax-paying companies to access least cost mitigation options, thereby minimizing the cost of carbon mitigation to the economy. If one wanted to say this in plain words, how you would explain it is to say that if, for instance, somebody runs a factory and he's got a certain amount of emissions, if he wanted to reduce his emissions, it may cost him 100 or even 500 Rand per ton to reduce the emissions. However, if a project across his fence is a project implemented outside of his fence, and in that project it only costs 50 Rand per ton to reduce emissions, then if you look at the economy as a whole, it's actually better for the economy that the cheaper project is implemented first, because it puts a lesser burden on the economy. So the carbon taxpayer then gets access to use emission reductions from lower cost mitigation options than what he can implement inside his own factory to offset his emissions. And then the second bullet there, the offsets will allow companies to reduce its emissions outside of their own operations when they do not have emission reduction options in-house. So again, if this factory has got a certain amount of emissions they wish to reduce but they can't, then they can actually buy offsets from outside, and then the money that they pay is used to implement a project outside of their own operations that reduce the emissions. This is a fairly complicated slide, but I think the importance of having this is that whereas on the one hand, carbon tax is structured in a way where you start off with a carbon tax of 120 Rand per ton, And then after you have applied the relief mechanisms, you end up by paying an average of 48 or 36 or even 24 Rand a ton. The way the carbon tax is structured is that those relief mechanisms do not reduce the economic value of the taxpayer using offsets. So when the carbon taxpayer uses offsets, the economic benefit he gets is always 120 Rand per ton, irrespective of how low the average cost of carbon for that taxpayer becomes. And this is demonstrated, and I don't think I have to go through the mathematics on the slide, but if I think Sabia can make the presentation available, then anybody can go through and do the sums. But the important thing is that the economic benefit to the taxpayer for buying a carbon offset is the full 120 Rand, which means that it really puts a ceiling on the price of carbon of 120 Rand per ton. The offset regulations we saw on the slide before, where we looked at the Tax Act, that Section 19 of the Tax Act says that the offset regulation need to be published. There was a draft published on the 12th of November 2018. Our presentation here is based on that draft. We do know that National Treasury is busy preparing final regulations, and we expect them to be published in the second half of 2019. When we look at the regulations, the first important thing is to look at the eligibility of the offset credits. Not all credits are eligible to be used in the carbon tax structure. The first eligibility criteria is that a project that generates credits must be registered with one of, at the moment, 3 and hopefully later 4 standards. The standards at the moment are the Clean Development Mechanism, or CDM. That's a United Nations standard. It was born with the Kyoto Protocol. And there's a very high likely that the CDM will cease to exist after 2020, when the Kyoto Protocol ceases to exist. There is current international negotiation around the Paris Agreement to structure a follow-up mechanism for the CDM, but that hasn't been finalized yet. The second standard is the Verified Carbon Standard, or VCS. The VCS is run by a not-for-profit organization called Verra out of Washington in the US. They provide standards for schemes like, for instance, the Californian Carbon Trading Scheme. And there are some development in the VCS at the moment. They're bringing out a new version of the standard they call VCS 4.0. And so that's in a bit of a state of flux. The third one is the gold standard. The gold standard is operated by a not-for-profit organization out of Zurich in Switzerland. It was actually developed in South Africa. We have never done a gold standard project, and we don't recommend that people do it because it is administratively even more heavy than the CDM. And anybody who's been involved in the CDM project will know that there's quite a lot of administration associated with carbon credits. The fourth one basically just says another standard that might be approved by the minister. And we know there's development of some South African standards at the moment that we could possibly talk about after this presentation. The second eligibility criteria is that the project must be implemented inside South Africa. The idea there is basically that we are not going to give carbon tax benefit by having money flowing out of the country. So the idea is that the money should stay inside the country. The third point is that the activity, in other words, the project, should not be subject to carbon tax. The carbon tax subject to carbon tax is defined in Schedule 2 of the Carbon Tax Act, and you can see on the right-hand side of the screen there's an example of what Schedule 2 looks like. It basically says that this is your activity. For instance, if you look at activity 1A, it says main activity, electricity and heat production, and there's a threshold of 10 megawatt thermal. In other words, if you were to produce electricity or heat and your installed capacity is less than 10 megawatt thermal, then you are not subject to carbon tax. And then your project can provide offsets into the carbon tax scheme. However, in that example, if your installed capacity is more than 10 megawatt thermal, then you cannot use offsets from that project for carbon tax. The reason for that is fairly simple. The reason is that if you implement an intervention inside the boundary of a taxable activity, then you pay less carbon tax in any case because you've got less emissions. If you were to now, on top of that, get a offset credit for it, then that would allow you a double benefit for the project. And National Treasury felt that they did not want to have anybody get double benefit through the offset scheme, and therefore they've excluded all activities that are subject to carbon tax. The last bullet point here relates to the timing, and at the moment it's still fairly unclear because the wording in the draft regulations were not that clear. But basically, if you've got existing credits, you've got a limited period of time during which you can utilize it. It's not that limited, it's up to the end of 2022, but any new projects are unlimited in its utilization. There's further limitation of allowances. The draft regulations have got a certain number of projects that you cannot get offsets for. The first is renewable energy IPP projects for which the power purchase agreements were signed before May 2013. Renewable energy projects larger than 50 megawatt. Projects that get a benefit from Section 12L of the Income Tax Act. Section 12L is a energy efficiency incentive that allows you to get a corporate tax benefit for implementing energy efficiency projects. The idea there is that you can, if you've implemented a project, you can choose to either use that project for offsets or to get 12L benefit, but you can't get both. Then carbon credits from nitric acid plants, and specifically the concentrated nitric acid called adipic acid. You can't get any carbon credits also for nuclear energy or for geological carbon capture and storage, or CCS. And then if we look at the last bullet there, it says the maximum offset allowance for the activity that you are in is specified in, again, Schedule 2 of the tax bill, with the Tax Act. And if you look at the table I've copied and pasted into this slide, you will see the second last column I've circled in green. So that says what the maximum percentage allowance is that you can get for different activities. For most of the activities, it's 10%, but for some of them, especially the ones where there are process emission allowances, you can only get 5%. You can only utilize offsets to offset 5% of your emissions. We'll touch quickly on the administrative process. There's a couple of steps. The first step is you register your project with one of the approved standards. At the moment, that's the CDM, the VCS, or the gold standard. Then once it's been registered, you must get a document from the Department of Energy called an extended letter of approval. That basically says that the project complies with two sets of criteria. The first is the Sustainable Development Criteria as published by the Department of Energy. And the second is the eligibility criteria to be used in the carbon tax as specified in the Carbon Tax Act and the regulation. Once you've got that, what you do then is to register your to cancel your carbon credit in the registry of origin. So if you've got a CDM project, for instance, your carbon credit would be issued in the CDM registry. You now cancel your credit in the CDM registry and you get a document they call an attestation of voluntary cancellation. And then if you look at the fourth step, the source documents for the listing of your carbon credit in the South African registry are two documents. First is the extended letter of approval, and second is the attestation of voluntary cancellation. When you submit those two documents together, then your credits are listed in the South African registry. Now you can transfer the ownership, sell the credits to a carbon taxpayer, and the carbon taxpayer can then use those credits to reduce his carbon tax liability. And it's in this step 6 that your carbon taxpayer then gets a benefit of 120 Rand per ton of carbon for every offset credit that he uses. This slide basically shows the carbon offset administration system process flow. And it's basically a repetition of what I've just said. You've got your project development right at the top where you register your projects. You've got the application in the next row where you apply for your extended letter of approval. And then together the cancellation certificate that you've got plus the extended letter of approval, they form the basis for your listing request. Once the credits are listed, then you can transfer them to the carbon taxpayer after a transaction to sell them, and then he can use it against his carbon tax liability. I've got some examples. These examples are all based on CDM methodologies. It's fairly relevant because even if you register a VCS project, you most probably use a CDM methodology. The first example is for the treatment of wastewater. In all carbon credit projects, we always look for two figures, two numbers. The first number is what happens in the baseline. The second number is what happens after project implementation. And the difference between the baseline and the project implementation is then the amount of credits that you get. In the wastewater treatment, if you can see my mouse on the screen, the cursor on the screen, in the baseline, you've basically got your wastewater. The wastewater would go into some sort of thing like, for instance, a lagoon. You would get biomass generated in lagoon. It's emitted to atmosphere, and the methane causes climate change and global warming. In the project case, there's two options. The first is that when you dispose of the wastewater, you treat it in a way, in this case, I think it's dewatering, and then you dispose of it in a way that does not cause the emissions, or it causes reduced emissions. Or in another alternative, you can capture your biogas. You can utilize it either in a flare or to produce electricity, and then in those cases, the methane is not emitted to the atmosphere. So the amount of credits that you get in this case is, first of all, the methane that you do not emit to atmosphere. In other words, the difference between what you see in the baseline and in the project case. And then also, if you replace grid electricity that's generated from fossil fuel, then you can get credits for the fossil fuel that is now not burnt because of the utilization of this biomethane. So that's the first example. The second example is the production of biogas to be used in the production of heat. And again, here, if you can watch out for my cursor on the screen, you can have methane generated either in a landfill site or in some sort of wastewater works. The biogas is then released to atmosphere, and it causes, the greenhouse gases there causes climate change. Also in your baseline, you've got the production of heat from fossil fuel. and the CO2 that's combusted in the fossil fuel then also causes climate change. If you now implement a project where you capture the methane either from the landfill site or from your wastewater treatment works, you do not allow the methane to escape to atmosphere, but you capture it, you put it into your factory and it's used for heat production, then you see that you stop the consumption of fossil fuel is reduced, the emissions is reduced, and then your emission reduction in this case is the difference between the amount of methane that was emitted in the baseline versus the methane that's emitted in this case, plus the CO2 that's emitted from fossil fuel combustion that is reduced now. So you could get credits for both of those sources. In another example, it deals with manure management, and again, it's a very simple, a very similar logic that's applied to it. You've got cows, you've got cow dung. It goes into some sort of a lagoon. We see this more often in piggeries. I think there's actually a number of biogas plants have been built around piggeries, and then eventually the methane that comes out of the lagoon would cause climate change. On the other hand, if you now capture the methane that comes out of the lagoon and you use it for flaring or for energy generation, then it's not emitted there, and then you can get carbon credits for the avoidance of that methane. Another example is to use methane to replace natural gas. In this case, the baseline is very similar. You had some waste, you had wastewater, or you had manure that would go either into a landfill site or into a lagoon. And in the baseline, the methane escapes to atmosphere. In your project case, you've got the same sources of methane. However, you capture it, you process it, and then you use it to displace natural gas. And then you again can get credits for both the reduction of methane to the atmosphere and for the displacement of the natural gas. So the last question is how to get benefits from carbon credits. It's basically, there's a number of steps that you need to do. The first is to understand the eligibility of a project. So there we typically recommend that people do an eligibility assessment. The eligibility assessment would typically look at an estimation of your amount of carbon credits that you can get. It can be expensive to register a carbon credit project, and you don't want to do it if you can't get enough credits to make it worthwhile. Then you need to check the additionality of the project. Additionality is a concept that says that you cannot get carbon credits for business as usual. What that means is that carbon credits should in some way contribute to the feasibility of the project. So if the carbon credits generate revenue for the project, that can be used to prove additionality. There are quite a number of other ways in which one can prove additionality. For instance, if a project is first of its kind in the country, it's automatically additional. If the market penetration of a technology is less than 5% in a country, then it can also be declared to be automatically additional. And then one can also look at some other barrier analysis tools that you can use to prove additionality using barrier analysis. Then one would choose a standard. So you would basically decide whether you're going to register this project under the CDM or the VCS. As I said earlier, we don't really think it's worthwhile to go gold standard because the administrative burden there is more. And then you would choose a methodology according to which you want to register the project. If a methodology does not exist, then there are two options. The first is to write a new methodology. The second is to do a revision of an existing methodology. The next step would be to register your project. There you basically produce a document called the project design document or project description, depending on which standard you use. This document is then audited by an accredited auditor, and the auditor then submits his audit report to the standard. which then after that the project is registered. Then in the operational phase, you would monitor your operations, you would do periodic verifications by an accredited auditor, and upon the successful completion of your verification audit, your standard would then issue the carbon credits. And that is about the whole presentation. I just want to see if I can get out of here now. I can't seem to, okay, I'm out now. Let me start the video again and then we can talk.
Robbie, can you see the chat? There's a question that's come through from Rob Clutie. If you go down to the bottom of the screen, the little button.
I seem to be stuck. Let me stop sharing my screen first. Okay. Yeah, now I can see chats. Okay, cool. One day I will be able to chat.
Okay, the one that came through from Rob, he says,
yes.
Very informative. Is it possible to model the emissions reductions from displacing fossil-derived fertilizers with digestate?
There isn't an existing methodology for that. In principle, now I may be wrong. Rob, yes, I think there's a VCS methodology for the displacement of chemical fertilizer. So it is possible, one will just have to have a look at the methodology. But to answer your question, Rob, the answer is yes, conditional upon the availability of a methodology.
Okay. Robbie, and then if you click on Q&A, there's questions coming through there too.
Okay, let me have a look. So from David, hi David. It says, in terms of the carbon tax bill, is this still to become legally binding? The current state is that the carbon tax bill passed through Parliament in March. In early April, I think it went through the National Council of Provinces. As far as we know, it has been sent to the President. We have not seen that the President has signed it yet. But about 2 weeks ago, SARS did publish the tax rules for the carbon tax. Initially for comments, and I think last week they published final rules for the carbon tax. So SARS has gone through the process of implementation. So yes, I do think that it is at the point now where people must accept that they will pay carbon tax. So David, I hope that answers your question. Just to read further, it says that, is it safe? Sorry, no, somebody's changed my screen. David, I was busy reading it and then my screen changed. I don't know what you asked.
Sorry, let's move to answered. Just click answered and the rest of it is there on the tab.
Okay, cool. Yeah, okay. So it says, is it safe to assume that as the offset is an integral part of the carbon tax bill, that the offset is just a formality? What is your view on the timing of the offset program? The answer there is that we have discussed this with National Treasury. National Treasury says that it is very much part of the tax system. There are three things that need to be in place before offsets can actually be used. The first is the ability of government to issue the extended letters of approval. National Treasury said that that will be in place from the 1st of July. So as from the beginning of July, one can actually apply for an extended letter of approval. The second was the finalization of the the offset regulations. They did say that they are working on finalizing it and that it will be published in the second half of the year. And the third is the operationalization. Sorry, that I got my tongue knotted there. Operationalization of the registry. The registry is has been built. It's currently being peer reviewed by a consultant from the World Bank, and the Department of Energy will go out after the middle of the year on tender for the hosting of the registry. So at the moment, there's a lot of work being done to make sure that the offsets will actually happen. However, we've seen with government that things don't always work as what they say, because initially the carbon tax was going to be implemented in 2015, and it's 2019 now that it gets implemented. So I think until everything all the documents have been published, there's always a risk that there may be another delay. If we can look at more questions, I'm going to start at the top here. Jörg Hilbert asked, in the past, audit costs have been so great. Small projects were not viable. In this case, who will pay for the audits and the verifications? So the audits have come down a little bit. The VCS is slightly simpler to do than the CDM, but there are still quite a bit of costs involved. The question about who pays is typically it is either the owner of the project or the buyer of the carbon credits that pay. We've seen some transactions where the buyer of the carbon credit will come and pay, but then they pay less for the credits. And we've seen quite a number of transactions where the project owner actually pays for it, and then they can sell the credits for a better price. Again, from your Gilbert, it said, the question is, in the case of farm biogas projects, is it possible to get credits by replacing chemical fertilizers? I think we've just discussed it. In principle, it is. It depends the availability of. Then a question from Christina. It says, "Hi, thanks for the presentation." And then it stopped. Christina, so maybe if you can just
Robbie, that question's been added to. It's the last one on the.
Okay, so let's go to the last. In terms of the offset projects, can the application of the methodology as a decision-making tool for waste-to-energy scenario strategies be considered as a project which is implemented will derive CO2 equivalent offsets? Essentially, must the offset project be a project, or could it be an R&D type project? Now, it must be a real project, because you can only get offsets for actual reduced emissions. So if you haven't reduced the emissions yet, then you can't get offsets for it. Typically, in the life cycle of a project, you would implement the project, then you would operate it for a while, and then you would do an audit to prove the emission reduction that you've actually achieved, and your credits are then issued on the basis of what you've actually achieved. Then there's a question from Armin Dekker, which is very informative. I might have missed it, but what is the estimated cost of registering? Typically, that depends on the project. We did a landfill gas project under the VCS last year, at the end of last year, for under, I think it was just about R500,000. And that's typical for what you would get. We would generally recommend that if your project will emit or reduce emissions by less than 10,000 tons per year of CO2, that you don't consider registering it, because because then the margin between your admin costs and the value of the carbon credits isn't that big. One can lump projects together to get to better scale, because your cost doesn't really go up if you put more projects into one basket. So as a thought, maybe the Biogas Association can put together a program of activities and register a project. That could be useful. A question from Eddie Cook. He says, who would it work when using clean biogas to replace vehicle fuel? We had a look at that for a specific project last year. The challenge we've got on the methodologies is that there is a small-scale project. A small-scale project is a project that reduces emissions by less than 15,000 tons a year. There is a small-scale methodology for vehicle fuel, but there isn't a large-scale methodology for vehicle fuel. So it will depend on the scale of the project. And then the fact that there isn't a methodology doesn't mean you can't do a project. It means that you've got two options now. Either you have to write a new methodology, which can take you about a year and probably cost you another R500,000 rand, or you can revise an existing methodology. Based on the work we did last year on the possible use of biogas in vehicles, we think that it is possible to do a revision of an existing methodology. But Eddie, before I can really answer your question, we'll have to have some more information about the actual project. Moving on to the next question, Jorge Hilbert. It says, is it possible to get credits for the industrial use of carbon dioxide from bioethanol fermentation process, since the CO2 was produced burning fossil fuels or burning natural gas before? The principle of carbon credits is that wherever you reduce emissions below a baseline, it can be possible. I'm not sure in your question specifically to which emissions you refer, because you get CO2 from the fermentation of bioethanol. But then you say the CO2 was produced from burning natural gas. So typically your bioethanol fermentation is fermentation from something like sugar or molasses, whereas your natural gas combustion is to produce heat. So Jorge, if you can maybe add some more words to that question, I can come back to it. Christina, I think we've addressed your question. David, you ask, is it possible for a CDM project that is registered for a 7-year term, renewable under the UNFCCC, to rather renew its crediting period under the VCS, considering the uncertainty with the Kyoto Protocol? Yes, it's possible. However, in the VCS, you've got other limitations. In the VCS, you have to register under the VCS within a certain period. So I assume that the renewal of the crediting period may be seen in the same light. Typically in the VCS, you would have a 10-year crediting period that's renewable rather than the 7 years under the CDM. The VCS currently has a consultation program open for what they call the VCS 4.0. And in that, they are proposing a time limit on the conversion of CDM to VCS projects. So I would recommend that you look on the VCS website. You can look for the consultation documents under VCS 4.0. and then just have a look at the time limits that is placed on the conversion of CDM projects to VCS projects. And then a question from Jorge again. It says, is it possible for farms to introduce ecosystem services, for example, increase organic matter in soil by no-till or crop rotation technique? Again, under the VCS, there are some soil carbon methodologies. You will, however, have to have a look at specifically the activities in the project, and then you'll have to have a look at the VCS methodologies to see if what you have in mind is covered by those VCS methodologies. Another question from Christina. Christina asked, as a follow-up on my last question, if a project will realize more than 10 megawatt per hour, so I assume it's more than 10 megawatt of electricity, only in the following years from starting, or the energy production fluctuates in terms in and out of the threshold, how is the tax applied, and can the owner request a temporary tax exemption? So the answer there is that the thresholds for paying carbon tax is the installed capacity of the electricity generation plant. So if you have electricity generation plant that is installed that has more than 10 megawatt thermal, not electrical, installed capacity, then you have to report and pay carbon tax. There's two things important around that. The first is that this only refers to electricity generating plant that uses fossil fuel. In other words, if you build a power generation plant that uses biogas and it does not combust fossil fuel, then you don't fall under that classification. And the second point, just to take note, is that the specification of 10 megawatt is for the thermal input of the fuel into the plant. Typically, a genset would have an efficiency of around about 35%, which means that your threshold then becomes about 3.5 megawatt electrical output. So if you've got a diesel generator or a engine that runs on natural gas that produces more than about 3.5 megawatt electrical output as an installed capacity, then you will have to register for greenhouse gas reporting and pay carbon tax on whatever you burn in that engine. However, if the engine does not combust fossil fuels, then you fall outside of that group. A question from Armin Dekker. Just go a little deeper into the vehicle fuel coming from methane. First of all, just the technology that we looked at before was to basically look at a plant that would separate the CO2 from the biogas to produce a fairly high purity compressed biomethane. The compressed biomethane would then go into trucks as a replacement or augmentation of diesel. The challenge we had there was that the large-scale CDM methodology, and I was wrong just now when I said 15 tons of CO2. I'll get to that now. But the large-scale methodology specifically states that you cannot use that methodology in conjunction with other methodologies. In other words, if you want to have the methane reduction, methane destruction credits from methodology ACM 0001, which is the extraction of methane, for instance, from landfill sites, then you can't use it in conjunction with a methodology to run trucks on biogas. The mistake I made just now was I referred to the limit of a small-scale methodology as being 15,000 tons of CO2. That's not correct. The 15,000 number is actually 15 megawatt worth of power generation capacity, but the limit for a small-scale project is 60,000 tons per year. Also, just another qualification, the answer I've just given you is based on gas from landfill sites. At the moment, I don't know what the situation will be if you get the gas out of a biodigester. It may be different, but one will have to have a look at the methodologies to answer that question. Another question from Jorge regarding my question on the CO2 from ethanol plants, the CO2 coming from the fermentation of starch in the case of bioethanol is biogenic, so it does not contribute to additional CO2 in the atmosphere. What we use as a consequential analysis, calculating the amount of fossil fuel emissions we reduce by using CO2 instead of producing it from a conventional plant. Jorge, what I think what you mentioning here, let me just read it again. What we use is a consequential analysis calculating the amount of fossil fuel emissions we reduced by using this CO2. In other words, are you using CO2 from fermentation to displace CO2 produced from burning fossil fuel, for instance, in fizzy drinks or something like that? If that's the case, I'm not sure. We will have to have a look at the baseline and the methodologies. I know that, for instance, if you look at the New Horizons plant in Cape Town, their initial business plan included the separation of CO2 and the sale of CO2 to cool drink manufacturers. I can't tell you off the top of my head if that would qualify for carbon credits. We'll have to do a deeper analysis to be able to answer that question. And David, it looks like those are most of the questions.
Yeah, that's what's come up, Robbie. My suggestion is I'm going to share your email address with everyone.
Yeah.
And then I'll also share your presentation if that's okay with you.
Yeah.
And then
that's
if there are any additional follow-up questions, the guys can contact you directly.
Yeah. Yeah. If anybody sends a question and I don't come back in the first day or two, please do me a favor, just send the email again, because my email box tends to get full and then sometimes I forget to go back. So it's not that I'm ignoring you. It's just the nature of inboxes. So don't feel bad to remind me if in the first day or two I haven't responded. It's just life happening.
Robbie, thank you very much for your time. I think it was very beneficial. And thank you everyone else who signed in to listen.
Yeah, thanks everybody.
Thank you, Robbie.
I'm sorry it wasn't more of a direct interaction meeting. I think maybe Zoom has designed it in a way that I can't see the other people or directly talk to them. But yeah, you're welcome to drop me an email.
Yeah, and I think if there is a lot of interest and people are wanting to go into more detail, we can actually arrange a workshop, a face-to-face workshop for whoever's interested.
We can.
So maybe what we'll do is we'll put that out to our members and gauge what sort of interest there is.
Yeah. Okay.
Great. Thank you very much, everyone.
Okay.
Thank you.
Goodbye, everybody.
Goodbye.
Bye-bye.